Welcome to this webinar about blockchain in the context of international trade and trade finance. We will talk about the benefit of the technology, a bit of market context. If we exist, currently trade is done via bilateral interactions. Each company in the ecosystem has their own system. Some, they might use common services that already exist, but most of them have their own system that don't talk to each other, essentially. And it's just a collection of bilateral interactions between a large number of parties in the ecosystems. And from there, we move to a system where ideally all the parties involved are participants in the network. There is a shared ledger between all those participants. That means that they can interact, they can exchange data, it avoids double duplication, and it secures the whole interaction between those parties. And obviously it increases trust because it's cryptographically secure. And the proof of all actions of parties on the network is recorded on the blockchain. As we mentioned, the main opportunities, it's essentially the values that I mentioned earlier. So sharing data in an immutable ledger with publicly cryptographic proofs of transactions and states. The ability to notify companies across the network real time as events are emitted. So whenever an action is performed on the network, the relevant parties can be informed immediately, and it creates a real-time user experience that is obviously a significant value. Obviously, cryptographic signatures of documents and legally binding messages and interactions, although this is for the legal value, obviously, of those aspects is not completely realized, I would say. And also another value in this space is the execution of business processes. Essentially, while we are sharing data between multiple parties, we can also execute business processes step by step on the network and guarantee and keep a record of all the actions performed by all the parties.
So looking ahead, we were saying previously that there are several initiatives and consortium on trade finance, 5 of them, sometimes with the same banks involved in different consortium. We think there are 2 big ones in the shipping industry. So is it reasonable to think that maybe at some point there will be a consolidation, and who will survive? So it's important to see that we have the network on one side, and the other side we have the apps, the functional flows on the platforms. And we believe that in the long term, the networks which will survive will be the ones which will behave more like an app store, where they will be able to attract more applications on the network, be able to connect as well to probably other networks, and have the technical ability to progress with the technology, which is still in some respect early stage.
I mentioned earlier, looking even further ahead, I mentioned earlier what are the current benefits of blockchain, essentially sharing data, real-time propagation of events, cryptographic proofs of everything that happens in the records. But going forward, there are many more opportunities with this technology, in particular around the tokenization of IOUs, invoices, documents, and other physical or digital assets. And also in particular with the payment via stablecoins or digitized fiat. We have seen recently, obviously, the announcement of Facebook with Libra, which I think created some excitement, and a lot of people are now seem now to be looking at stablecoins or digitized fiat use cases. And there are already fairly prominent initiatives in that space that could potentially benefit trade finance use cases as well in the future.